Yeah. So if you can hear me, can someone send me yes in chat box? Okay. Good morning. Now today is the last day, and what I have planned to do today is something additional. We have completed almost all subject relevant areas, and we have discussed exam related questions. Today, something additional, and there were a few questions from this area. We have discussed about corporate governance, then IT security under directions, rules, determinations, notices, and guidelines. But there are some other guidelines which were from time to time tested. Okay. Now, for exam purpose, I have given you specific topics. Let's say primary dealer completed, unit trust we completed, insurance, stock brokering, then different subjects we have completed. Last week, we almost completed the syllabus and discussed in general. So what I'm doing today may not be much interesting. Okay. So after the session, I will leave some reading materials, something additional. Okay. So I'm taking this book, that is Directions, Rules, Determinations, Notices, and Guidelines applicable to licensed finance companies. Out of that, many topics were so far discussed. Right. So the preface reads something very important. Monetary Law Act established CBSL as the authority responsible for administration, supervision, regulation of the monetary financial payment system of Sri Lanka. Okay. So CBSL has got power by this specific law, the Monetary Law Act. So what are the areas they are looking at? Administration, supervision, regulation of the monetary, financial, and payment system. So we have talked even about payment system. By the same act, CBSL has been charged with objectives of economic and price stability and financial system stability, with the view to encourage and promoting the development of the productive resources of Sri Lanka. Okay. So the same act has empowered CBSL to look into these objectives to achieve economic and price stability and the financial system stability. So by now we know if one finance company fails, that may create repercussions and a dominoes effect. So CBSL is ensuring financial system stability. In order to ensure financial system stability, the Finance Business Act number 42 of 2011, enacted on 9/11/2011, repealed and replaced the Finance Companies Act number 78 of 1988. So this act removed and replaced the previous act. So previously we had Finance Business Act number 78 of 1988, but by now we have Finance Business Act number 42 of 2011, removed and replaced. Both acts have empowered the Monetary Board to issue directions, rules, determinations, notices, and guidelines to licensed finance companies. All such directions, rules, determinations, notices, and guidelines currently applicable are presented in this book for the convenience of LFCs, their auditors, and stakeholders. So this is the beginning of this booklet. Means what? Now you know Finance Business Act. What is the number? 42. What is the year? 2011. That is governing finance companies. That has empowered CBSL to issue directions. And the main objective is to ensure financial system stability. Okay. What is meant by financial system stability? So that ensures people have confidence in finance system. When people don't have, the general public do not have confidence, when they do not trust finance companies, they won't withdraw money. And one by one, the financial companies will collapse. So we have seen many efforts taken. Have you seen last week's newspaper advertisement about an unauthorized deposit taking institution? Say yes or no. About yes. So there was a company in Kurnagar. The name, owner's name, everything is mentioned in this half-page advertisement. So CBSL is taking activities to ensure stability of the finance system. Okay. So within the period we started to discuss, we have heard the term leasing mafia after one sad incident. Okay, means what? There are many unauthorized institutions. Having such institutions is not healthy for the stability of the financial system. Okay. So CBSL, its monetary board, is given power by this Finance Business Act number 42 of 2011. You have to remember certain acts. Pawning, what is that? Okay. Finance business, what is that? Number 42, year 2011. Okay. Rule number 1, 2012. Okay. This rule may be cited as the Finance Companies Application, Rule number 1 of 2012, and shall apply to every applicant company seeking for license to carry on finance business in terms of these. Every application for the license by a finance company shall be made in a form. So the application form is given. Okay. The form, its format is given. Every applicant company shall pay a non-refundable application fee of 100,000. Okay. So likewise, all the steps of registering is given. Right. So you have the application. What are the information that you should provide? Core capital, board of directors, who they are, state whether company is a subsidiary or an associate. So likewise, all relevant information should be provided. Okay. So what I'm doing today is something additional. Okay. So there were a few questions on other directions that other than the corporate governance, which we discussed much in detail. Okay. Basic requirement for licensing under the Finance Business Act number 42 of 2011. So I'm again and again repeating the number and the year for you to remember. 42 2011 FBA, Finance Business Act. Right. To be eligible, to be licensed as a finance company, an applicant company, number 1 should be a registered company under Company Act number 7 of 2007. Okay. So what is the Company Act? Number 7 of 2007. Should not be a company limited by guarantee, a private company, an offshore company, or an overseas company within the meaning of the Companies Act number 7 of 2007. Okay. So certain companies are excluded. Number 2, should have a minimum core capital of 400 million. Okay. Then what are the documents that should be submitted when you are applying to get the license for the finance company? So this is the first act. How do you get the license? Okay. So what are the documents that you might have to submit along with the application? So the first thing is the certificate copy of incorporation, confirmation from the auditors on the availability of core capital, articles of association, and the memorandum and articles of association. Okay. Then the rest of information, but you have to submit. Right. So the first direction is named as Rule number 1, 2012, Finance Companies Application. It all talk about who is eligible to become an applicant for a licensed finance company. Now next you have disqualifications under section 21 of Finance Business Act number 42 of 2011. Assessment of fitness and propriety of directors and officers performing executive functions. For the finance company, what kind of people should govern it. Okay. So when you are evaluating banks, you have an acronym known as CAMEL. Okay. So when you are evaluating banks and look into how strong they are, you look into CAMEL, CAMEL, capital, asset, okay, capital, asset quality, quality of management, M, earnings and liability, M, management. In this acronym CAMEL, the only qualitative aspect is M, management. Others can be measured numerically. Capital, assets, earnings, liability are numeric, are numbers. But quality of management is a qualitative measure. But that is very important. The quality of the people who are running the business, the finance business, can make or damage the finance company. So, assessment of fitness and propriety of directors and officers. So, what is that? Number one, a person shall be disqualified from being appointed or elected as a director of a finance company if such person, A, does not possess academic or professional qualifications or effective experience in banking, financing, business or administration, or any other relevant discipline. Okay. So if you want to be a director of a finance company, you must have academic or professional qualification, either a basic degree or a professional qualification like chartered accountancy, CIMA, ACCA, whatever you call, professional qualification. Means what? Unqualified people will not be able to manage a finance company. B, is being subject to any investigation or inquiry in respect of a fraud, deceit, dishonesty, or other similar criminal activity conducted by the police, any regulatory or supervisory authority, professional association, commission of inquiry, tribunal, or any other body established by law in Sri Lanka or abroad. So the person who is undergoing an investigation for a fraud cannot be a director of a finance company. Section 2 under B has been found guilty in respect of an act of fraud. Okay, first, if there are investigation against, still you cannot be a director. Then the section 2 under B says, if you are found guilty of the same, then you cannot be a director. Number 3, has been found by an regulatory or supervisory authority, professional association, commission of inquiry, tribunal, or any other body established by law in Sri Lanka or abroad that such person has committed or has been connected with commission of any act which involve fraud, deceit, dishonest, improper conduct, or non-compliance with any statute of rules, regulations, directions, or determinations issued thereafter. Okay. So, we are looking into the right type of people who should manage a finance company. Okay. We have seen in developing countries from time to time, thanks to democracy, the ruling party change. The supporters of ruling party, they want a larger piece of the victory. So they prefer to get directorships. But this act has prevented people who have mismanaged earlier, who are under investigations of fraud, who have committed fraud, from entering into finance companies top level. C, has failed to satisfy any judgment or order any court or to repay a debt. D, has been convicted in Sri Lanka, in any court in Sri Lanka or abroad for an offence involving moral turpitude. E, has been convicted by any court for any offence under the Finance Business Act number 42 of 2011 or the Companies Act number 7 of 2007. Okay. F, is a person against whom action has been taken by the board under Section 51 of the Finance Business Act number 42 of 2011. is being subject to court proceedings for an offensive involving an act of fraud, deceit, dishonesty, or other similar criminal activity, has been convicted by court for an offense involving in an act of fraud, deceit, dishonesty, or other similar criminal activity at any time during the period of 15 years immediately prior to being so appointed or elected. Now, these tests are looking at the type of people who are going to get elected as directors. Dishonest people, people who have been found guilty for frauds, people to whom against the investigations are going on, cannot be the directors. Why? Because such people can play out others' money. At finance companies, what we do collect deposits and lend. If you are running your own business, these criteria may not apply. But when you are running a business from others' money, okay, so we have discussed earlier why the finance companies and banks are different from many other companies. In our balance sheet, capital is a very small percentage compared to other liabilities. We get more deposits, means what? We can play out other people's money, which other companies will not enjoy. If so, the top directors should be a set of quality people. Right. So how do we measure this quality? That's what we have been discussing so far. Fitness and propriety of directors and officers performing executive functions of finance company. H has been removed or suspended by a regulatory supervisory authority from serving as a director, CEO, or other officers in any bank, finance company, or corporate body in Sri Lanka. Has been determined by the board as having carried on finance business in contravention on subsection, as having accepted deposits in contravention of subsection 2. Okay. So likewise, we are looking at quality of management. Okay. Now, after this session, I leave out the reading material. If I just let you the reading material, you may not listen to me very carefully. Okay. So what I'm doing is something additional. We have already completed the syllabus and we have discussed even with exam questions. Yet this area I left for the last day. Okay. So very few questions, but something very important. Right. Number 2. If the monetary board so determines, any person who has been a director, CEO, or held any other position of authority in any bank, finance company, or financial institution whose license or registration has been cancelled shall be disqualified from being appointed or elected, as the case may be, as a director, CEO, secretary, or key management personnel performing executive functions of a finance company, or from holding such post. Okay. So if a finance company license has been cancelled, and if such a company's top person want to find employment from another finance company, that will create problems. Number 3, any person who acts as a director, CEO, secretary, or key management personnel of a finance company while being under any disqualification set out in the subsection 1. Number 4, in addition to above criteria set out section 5 of directions number 3 of 2008 on corporate governance for finance company shall also be applicable to a director of a finance company. Okay. So these directions are looking at the quality of people who should manage a finance company. So there's affidavit. The form is given. Okay. So I declare myself that I am fit enough. Okay, so I declare I have these academic qualifications. I declare that I am not subject to disqualifications as to the annexure. Okay, right. Then a person shall be disqualified from being appointed or elected as a director of a finance company if such person does not possess academic qualification or subject to these inquiries. Then the declaration of application. Okay, so all the relevant information should be submitted. Then you have finance company's annual license fee. Okay, so there is a direction, rule number 2 of 2012. The license fee payable by a finance company in the year of licensing shall be rupees 500,000 from the date of this rule and shall be paid to the CBSL. Then all the tier 1 capital, supplementary capital, we have discussed that. That should be mentioned and submitted. Okay, so all the relevant documents. And how do you measure core capital ratio? Core capital divided by risk-weighted assets into 100, and you get the percentage. We have discussed that in the class. Then you have set of directions for tier 1 capital, core capital, minimum core capital requirement. Okay, so that part we have discussed. Okay, now can someone type me what are the elements of core capital? Okay. So direction is number 1 of 2011. It talks about minimum core capital. Okay, we have discussed about core capital, capital adequacy, why it is important. Okay, can someone just type me what are the elements of core capital? Yeah, what are the elements of core capital? Core capital, what are the elements? Number 1, paid up, authorized, ordinary shares. Number 2, statutory reserves, general reserves, unpublished profit and loss accounts, published profit and loss. Okay, so to remember, I have given and discussed that part. Then finance companies provision for bad and doubtful debts, direction number 3 of 2006. Every finance company shall classify accommodation as non-performing in the following circumstances. Okay, where payment of principal and interest have been in arrears for a period of 6 months or more. Right, so I'll leave out the handout for you to read. Finance companies single borrower limit, direction number 4 of 2006. Okay, now single borrower limit means what? A finance company should not limit its lending to few people. Tell me what will happen if a finance company lend out its collected deposited money to one individual. Okay. Tell me what will happen. Okay, right, good. Yeah. So if finance company give all its deposits to one party, if that one party fails, finance company will collapse. Okay. So that leads to concentration risk. Yes. So the single borrower limit, SBL, direction number 4 of 2006, subject to restrictions imposed under paragraph 2 of finance companies lending, direction number 5 of 2006. The maximum of a single accommodation or aggregate of accommodations granted to by a finance company and outstanding at any point of time from an individual borrower shall not exceed 15% of the capital funds of such finance company as shown in the last audited balance sheet. Okay. So there is a maximum limit, 15% out of capital shown in the last financial statements. Means what? If you give away more than that, you're undertaking unnecessarily high risk. Number 3, the maximum of a single accommodation or the aggregate of accommodations granted by a finance company and outstanding at any point of time from any group of borrowers or from subsidiary companies or associate companies of such finance companies shall not exceed 20%. Okay, so a finance company may start up a subsidiary or associate, and there is a high probability of giving away loans to its own subsidiary. But there is a limit. Out of capital funds, less than 20%. Number 4, a single accommodations granted to an outstanding in respect of categories of borrowers referred to in paragraph 2 and 3 hereof, each of which exceeds 10% of capital fund of a finance company as shown in the last audited balance sheet, shall not, when all such outstanding accommodations are aggregated, exceed 50%. Number 5, the maximum of a single unsecured accommodation. Okay, what is meant by unsecured accommodation? Unsecured accommodation, what is that? Clean lending, very good. So we have seen when LTV was imposed, loan to value ratio was imposed, many companies who depended very high amount on vehicle leasing started to give away clean loans. That's the term they say, clean loans. Okay, means what? We give a loan without a security. So when I talked about credit evaluation, I talked about an acronym, CAMPARI. Okay. So you are looking at security, insurance. Okay. But here comes a new product, NINA, no income, no loan, and definitely fail. Right. Here we are not looking at no assets, but we are looking at earnings. Clean loans, without a security, giving away loans. The maximum of a single unsecured accommodation or the aggregate of unsecured accommodations granted to by a finance company and outstanding at any point of time from a single borrower shall not exceed 1% of the core capital. Okay. Now the other rates so high, 15%. Here, 1% means what? There's a very high probability of not paying back so-called clean loans. Therefore, it should not exceed 1% of core capital. So the direction has control. Only 1% out of the core capital can be given out as clean loans. Now, these directions protect general public's deposits. Okay. For the purpose of this paragraph, unsecured accommodation means accommodation made without a security or any accommodation with security consisting of assets, the market value of which is not adequate to cover at least 75% of the accommodation. Okay. So the clean loan or the unsecured accommodation is defined without a security or even with a security where the assets shown as the security has a market value which cannot cover even 75% of the loan given. That's unsecured loan. Now, what is market value? That is also defined. For the purpose of this paragraph, market value in respect of motor vehicles and machinery shall mean a valuation obtained during the preceding 6 months from a valuer approved by the director, and in respect of land and building, the value decided by a qualified professional valuer. Okay, so when you think about market value, okay, so when you are giving away loan, you want to give away a loan where it's smaller than the market value of the asset. If the loan is high and the market value is less than 75%, then that falls into the category of unsecured loans. Now, when you think about value, who is valuing that? For the vehicle, there are valuation officers. So you have to get a valuation report. Okay? Then people can play with that. You take a valuation report of 2 years back. Okay. Value of vehicles are fluctuating very fast. Therefore, a time limit is given. A valuation obtained during the preceding 6 months from a valuer approved by director. Okay. Right. So prevailing market value should be found out. Number 6. For the purpose of this paragraph 2, 3, and 4 of the direction, if accommodations have been granted by finance company against the security of the items indicated below, the value of such security may be deducted from the relevant accommodation. Sri Lankan government securities, free from any lien or charge. CBSL of Sri Lanka securities, time deposits in a licensed commercial bank. Okay. Now, what is accommodation? Okay. So these directions clearly define every important word. Okay. So what is unsecured loan? Means what? There are enough areas where you can be tested. Okay. What is an unsecured loan? Then you must be able to explain what is meant by unsecured loan. What is accommodation? That means loans, facilities under hire purchase or lease agreements, provision of funds through debt securities such as bonds, debentures, asset-backed securities, commercial papers, promissory notes. They all are accommodations. Now, associate companies and subsidiaries. What is associate company? Shall mean a company in which the finance company holds 20% or more, but less than 50% of the issued ordinary share capital of the investee company. Okay. Remember it very carefully. Associate. Principal has shares 20 to 50. That's an associate. Okay. Capital funds. So anything above 50s. Okay. If you have shares of a company 20 to 50, that is an associate. If you have shares of a company more than 50%, what is that? A finance company is having shares more than 50% of a company. What is that? A subsidiary. Very good. A subsidiary. Right now. Okay. Now, People's Leasing Company has 75% of shares of People's Insurance. People's Insurance. What is it from the People's Leasing point of view? Associate or the subsidiary? Okay. So PLC, People's Leasing, has 75% shares of People's Insurance. From the point of People's Leasing Company, what is People's Insurance, PLC? Is it associate or the subsidiary? Yeah, it's a subsidiary. Okay. People's Leasing Company, let's say, there was a time, has 30% shares of People's Merchant Bank. What is it? 30% shares of People's Merchant Bank. That's associate. People's Leasing has 5% shares of Sanasa Development Bank. What is that? People's Leasing has 5% shares of Sanasa Development Bank. Okay, so it's not a subsidiary, not associate. Okay, when you think related party, what is the definition? That's we have discussed. Look into that. Related party transactions we have discussed. Okay, for the related party, it must be a subsidiary or the associate. Okay. Now, qualified professional valuer shall mean a chartered valuation surveyor, a fellow of the Institute of Valuers of Sri Lanka with a degree or diploma in valuation and with work experience over 15 years is a valuer. A graduate member of the Institute of Values Sri Lanka with work experience over 18 years. An associate of the Institute of Valuers Sri Lanka with work experience over 20 years. A licentiate of the Institute of Valuers Sri Lanka with work experience over 25 years. They are called valuers. Relative shall mean the spouse and or the dependent child of an individual. Okay, so related parties, either the relative or the subsidiary or the associate. So who is a relative? Spouse or dependent child, subsidiary company. Okay. Now here the director is often referred as the Director of Department of Supervision of NBFI of CBSL. Then Finance Companies Lending Direction number 1 of 2007. Okay, now we are looking at how to manage a finance company. What are the directions? Number 1 of 2007. No finance company shall grant any accommodation. Number 1, to a director and or a relative of a director of a finance company. Number 2, to its holding company. Number 3, on the security of its own shares or on the security of the shares of any of its subsidiary companies. To purchase its own shares on the guarantee or indemnity of a direction of a finance company, a relative of a director of a finance company. Okay, got it? A finance company is there to give away loans. What is our duty? Collect funds from surplus units and transfer it to deficit units. And we are given a license to accept deposits from general public. After accepting this general public's money, if I, the director, use it for my own family's usage, that is not allowed. Okay, so no finance company shall grant any accommodation to a director or a relative of a director. Then it's holding company, right? So People's Leasing cannot give a loan to People's Bank, mother company, holding company. On the security of its own shares or on the security of the shares of any of its subsidiary companies. Right? People's Leasing Company, People's Leasing and Finance PLC, can engage in margin trading business. What is margin trading? What is margin trading? Very good. Securitizing existing share portfolio. Very good. So People's Leasing is engaging in margin trading business. Means what? Existing share owners, existing shareholders come to us, securitize their already existing share portfolio and buy additional shares. So these days, there is a very good demand. Why? When the market is in a bull phase, people prefer to grab more profitable opportunities. For that, they need money. They have already invested in shares and they can securitize that against take loans and buy the shares that they believe will go up soon. That will double their profit. Okay, right. If you have a margin account with People's Leasing Company, and if you have 1 million shares of John Keel's Holdings, can you get a loan to buy further shares by securitizing your existing John Keel's Holdings shares? Yes or no? Your securities shares, and you have invested in John Keel's, that is the only company where you have shares. Can you securitize that and buy further shares of any other company? Yes, good. You come to People's Leasing Company and say, I have 1 million shares of People's Leasing Company, and I want to securitize that, and I want to buy 500,000 shares from John Keel's. My security is shares of your own company. Can you get margin facility from us? Can you get margin facility from People's Leasing Company? No. Okay. You come to People's Leasing Company and say, I have a margin account with you, and I have 1 million shares of People's Insurance, which is a subsidiary of yours, and I want to buy 500,000 shares of John Keel's Holdings by securitizing People's Insurance shares. Can you do that? No. Okay. So you have understood the meaning of this. To purchase its own shares, right? You have shares of John Keel's Holdings, and the value is 1 million. Can you securitize? You already said yes. Yes, you can securitize that. Now, by securitizing John Keel's Holdings shares, can you buy shares of People's Leasing Company? You have a share portfolio of, right, now I'll read out the direction again. No finance company shall grant any accommodation. Number 4, to purchase its own shares. Got it? You have shares of John Keel's Holdings, that is you try to securitize. That you can do because it's not belonging to us. Yes, you can securitize that. By securitizing John Keel's shares, you want to buy shares of People's Leasing Company. That you can't do. Number 4, to purchase its own shares. That you can't do. Okay. Right. Okay. Now these areas I'll give the handout for reading. Today I am giving these additional things because there can be questions like this. Okay. So far I have prepared you perfectly well under different topics. Insurance, okay, what? Venture capital, what? Owning, cooperative societies, so likewise different headings. Then under corporate governance, we looked into a set of directions in detail. BCP we discussed, information security we discussed. Now today we are looking into other directions. Now you can see the importance of these directions. Finance Companies Investments Direction number 7 of 2006. Subject to paragraph 3 and 4 hereof, a finance company may invest in the ordinary shares of any company, provided that, okay, so you are in the business of finance. You accept deposits from general public. Then you make them assets. Your deposits are liabilities, and the other side of your balance sheet is assets. One part of assets can consist of investments. So you can invest. You can buy ordinary shares of any company, provided that, number 1, investment in the issued ordinary share capital of a company shall not at any time exceed 5% of the capital funds of the finance company as shown in the last audited balance sheet. Your business is not investing the deposits money, but you can invest up to 5% of the capital. Such investment shall not at any time exceed 40% of the issued ordinary share capital of such investee company. Okay, if you are investing, you can never exceed more than 40% of that investee company. The aggregate amount so invested in the issued ordinary share capital of companies shall not at any time exceed 25% of the capital funds of the finance company. Okay. In aggregate, you cannot buy more than 25% of capital funds. Okay. Now, what is the importance of investing in assets? What is the importance in investing in shares as an asset? Okay. A finance company, after taking liabilities, deposits, its basic function is to give away the same collected amount as loans, lending. But you can also invest part of it. So that part is restricted, 5% of one company. Now, what is the importance of investing in shares? Yeah, finance companies can invest in other companies' ordinary shares. They can buy from stock exchange, other companies' shares. Why do they do that? Because they can differentiate the asset base. That's important. Right? But it does not mean your entire business is investing. Okay? So your business is loans. However, in order to diversify your asset portfolio, you can consider shares as an investment. Finance companies liquid assets, direction number 1 of 2009. Okay, so when I give you this lengthy handout, what you can do is you can first read number 2 or the section 2 of every direction. That summarizes the important part. Okay. Number 2, every finance company shall maintain a minimum holding of liquid assets as defined in section 46 of the Finance Companies Act number 78 of 1988. Shall not at close of the business or any day less than number 1, 10% of outstanding value of the time deposits received. The face value of certificates of deposits issued by the finance company. Number 2, 15% of the outstanding value of savings deposits. Okay. So it's about liquid assets. What do you mean by liquidity? What do you mean by liquidity? Ability to meet short-term obligations. Yes, ability to convert into cash within short notice. So ability to meet short-term obligations. Very good. So for the finance company, you must have liquid assets. For the insurance company, you must have liquid assets. Okay. Ideally, you prefer not to have liquid assets and invest them for the highest returns. But there may be people who want to withdraw money in an urgent situation. So there must be liquid assets in order to meet such obligations. Correct. So that is mentioned. What are the liquid assets, where you should do that? Right. So treasury bills, government securities, CBSL securities are there. Finance companies writing off loans and advances, direction number 3 of 1991. A finance company shall not write off any loan or advance granted by it to any of the under noted persons or institutions without prior approval to the monetary board. When a loan is granted and when you find continuous defaults, one day you may write off it from your books. But these cannot be written off without prior approval from monetary board. any of its directors or any relative of such director, any undertaken in which any of its directors has interest as a director, partner, manager, agent, investor, guarantor, or shareholder, any of its subsidiary, associate, or connected concerns, any person who is a manager, officer, or an employee of a company registered under Finance Companies Act number 78 of 1988. Okay. So you can write off, but certain type of loans, when you want to write off, you have to get the board approval. Every finance company shall maintain a register showing details of written off loans or advances from the books of the company, giving the following particulars: full name and address of the and NIC, original amount granted, rate of interest, last date of repayment, total amount recovered, amount written off, date of writing off from books, reasons in brief for writing off. Okay. All right. So what I'm doing today may not be much interesting. Okay. So this is why I do it in the last day. Anyway, I leave out the reading materials, so you can read them out. When you are reading out, first read number 2 of the direction. Number 2, summarize. Then you can go into detail. However, many questions can be asked, like what is a subsidiary, who is a related party, okay, and then there can be some simple case study like questions we can raise from this area. Okay, XYZ finance company owns this much of ABC company, and a customer comes to you and want to have a margin account. Then you can ask, okay, what is a margin facility? Can XYZ finance company consider this amount? So likewise, based on what you read, what you heard so far, a lot of questions can be asked. But for past papers, what we have seen is there were questions on directions, not often repeated, so you should know them. Okay. Finance Companies Deposits Direction number 1 of 2005. A finance company shall not accept any deposit repayable on demand or any time deposit repayable after a period of less than 1 month from the date of receipt of such deposit, or more than 60 months. Okay. So the maximum is 5 years, 60 months from the date of receipt of such deposit, and shall not renew any time deposit received by it unless such deposit so renewed is repayable not earlier than 1 month. So deposits direction is there. Finance companies business transaction with directors and their relatives. So you can see a considerable amount is there to look into directors and the relatives. Number 2, a finance company shall not, without the approval of director, conduct any business transaction with the director of a company or a relative of a director of a company where the total value of transaction exceeds 5,000 per month or rupees 500,000 for the financial year. Okay. So related party transactions are restricted by these directions. Insurance of deposit liabilities. Number 2, under Section 27 of the Finance Companies Act, the CBSL may establish, maintain, manage and control a scheme for the insurance deposits held by finance companies registered under the Act. So we have talked about deposit insurance scheme. Information security policy, we have discussed, PCP and others. Interest rates direction number 5 of 2012. The maximum annual rate of interest. Okay, so it's rated against treasury bills. So I'll leave the reading material for you. Then comes corporate governance. Corporate governance we have discussed in detail, and we have even looked into questions from past papers. Then finance companies assessment of fitness and propriety of directors and officers performing executive functions, direction number 3 of 2011. Number 1, no person shall be appointed as a director of a finance company or an officer performing executive functions, hereinafter referred as officer, in such company unless that person is a fit and proper person to hold office as a director or an officer in terms of the provisions of these directions. Okay, a person should be fit and proper, okay, to function as a director or even as an officer. Right. So what are these? Now, criteria for assessment of fitness and propriety. Are you fit and proper enough? What is the criteria? A, that such person possesses academic or professional qualifications or effective experience in banking, finance, business administration, or any other relevant discipline. Now, that's why you must try to grab professional qualifications in your early life. That's what you're doing. Okay? That's A. So if you don't have any professional qualifications, or maybe like 15 years experience, then you will not be able to get into these positions, irrespective of how much connected you are. B, that such person is not being subject to an investigation or inquiry involving fraud, deceit, dishonesty, or other similar criminal activity conducted by the police, any regulatory or supervisory authority, professional association, commission of inquiry, tribunal, or other body established by law in Sri Lanka or abroad. Means what? We want to see a set of clean people running the business. Okay. C, that such person is not found by any court of law, regulatory or supervisory authority, professional association, commission of inquiry, tribunal, or any other body established by Sri Lanka, to the effect that such person has committed or has been connected with the commission of any act which involves fraud, deceit, dishonesty, improper conduct, or non-compliances with provisions of statute or rules, regulations, directions, or determinations issued thereunder. Okay. So you can see the type of people that should become officers and directors of finance companies. So the quality of management is a very important aspect when you are evaluating companies. D, that such person has not been convicted by any court in Sri Lanka or abroad in respect of an offense involving fraud, deceit, dishonesty, or similar criminal activity. E, that such person has not been declared insolvent or declared bankrupt in Sri Lanka or abroad. So the bankrupt person cannot become a director or officer. Okay. F, that such person has not failed to satisfy any judgment or order of any court, whether in Sri Lanka or abroad, or to repay a debt. A person who has failed to repay a debt ordered by courts is not fit. G, that such person has not been declared by a court to be unsound mind. So if you are found to be unsound in mind, then you are not fit enough to hold these positions. H, that such person has not been removed or suspended by a regulatory or supervisory authority from serving as a director, CEO, or other officer, or an employee in any bank or finance company. I, that person has not been a director, CEO, or held any other position of authority in any bank, finance company, whose license has been cancelled or suspended, which has been wound up, being compulsory liquidated. Okay. So if you have failed to manage a similar company earlier, then you are not fit enough to run another finance company. Okay. Now, who are the officers? We talked about fitness, fit and proper of directors and officers. So number D, define these directors. Who are the officers? Now, who are meant by executive officers? Officers performing executive functions in a finance company are as follows: CEO, stroke general manager, AGM, senior deputy general manager, SDGM, deputy general manager, DGM, AGM, COO, CRO, chief risk officer, CA, chief accountant, CFO, chief internal auditor, compliance officer, head of treasury, head of legal, head of IT, company secretary, officers serving as consultants, officers serving in decision on credit, asset, and marketing of products of the respective finance company, any other officer within the meaning of key management personnel. They are the officers. Now you can see how much detailed these directions. Why? To ensure that finance companies are run by right type of people. Okay. Right. Okay. So we have covered almost all relevant areas. Right. So I'm not trying to take away any unnecessary time from you. Right. So we have discussed all relevant things coming under the syllabus. I have done my part. Okay. And when I look at the way you answer, at least 3 good answers from 3 different people I have seen, but I have not seen answers of all. Okay. Right. So I'm trying to end the session now. Okay. So this is the first time we conducted online sessions. The only drawback of online session is, from my point of view, is not able to see how you answer. Right? I know in order to send me answer, you must be able to type fast. Very few people can do that. Thanks for those who sent me answers. But if it's a normal classroom, definitely I will walk around and see how the pens are running. That forces you to prepare next time. So that was lacking here. The other, when you physically meet each other, you are creating a network. That's something very important for the bank and a person who is going to work in a finance company. Okay. You will develop a very good social network, and that will protect you and your institute, whatever institute that you are working. So there are many informal things. Maybe you may discuss about different type of new things happening in the market, which may be too late to be identified. For an example, there can be certain people who all of a sudden want to take too much loans. Certain industries that are booming up without noticing much, maybe prawn farming, maybe, yeah, so in regional areas. Even in pawning or gold articles, you may all of a sudden find, okay, there is a high fashion of cricket wickets. Okay, people want to have this wicket shaped or bat shaped pendants, and inside tungsten, outside gold. So such informal things, okay, may be happening in a one specific area. Senegal, then the people or the those who are connected will say, okay, if such pendants are coming, prepare. Okay, I found it fake articles, and it's easy to create such fake articles using cricket bat shaped pendants. These are informal things. So you will one day start to discuss such things, which is not in the books. Okay, so hands-on experience you may share. So that's what you missed by having this online session. But online sessions, there are some useful aspects as well. You study on your own, no traveling time, no unnecessary. In Sri Lanka, the unnecessary time is our traveling time. So that is prevented. Right. So last week I covered and revisited the syllabus, so I'm not going to do that today. I'll leave one thing, my email address. So if you have any questions on the areas we have done so far, you can send me questions. Just your subject, you can say IBSL lecture, okay, or non-banking questions. Then I may, as far as time allows me, I may be able to send you whatever the clarifications I have. Okay, so I wish you all the best. Right, you have been sending me good answers. Yeah, I can remember a few good names. All the best. Thank you. With that, I end the entire session.